Hello and welcome to this additional bonus lecture on behavioral finance insights in this course on fundamental equity analysis. So in this section, we will keep telling you more ways and strategies for practical fundamental equity shares and stock analysis. And in this particular lecture, we will talk to you about how to consider investment sentiments, biases, and psychological factors that may influence market dynamics to decide when to buy, sell, or hold a stock. So, what do you think? How do you think we should consider investor sentiment, biases, and psychological factors? Any thoughts? Okay. So, considering investor sentiments, biases, and psychological factors is an integral part of the behavioral finance, which recognizes that market participants are not always rational and can be influenced by emotional and cognitive biases. And how can you incorporate? Let's look at many things that you can do in your decision making of buying, selling, or holding a stock. So, first thing you need to do is to understand the behavioral biases, and that you can do by educating yourself, by familiarizing yourself with common behavioral biases such as fear of missing out, loss aversion, overconfidence, herd mentality, and recency bias. Also, recognize the biases in yourself. Be aware of your own behavioral biases. Acknowledge that as an investor, you are susceptible to emotional reactions and biases. Then you need to monitor the market sentiment. And there you could use news and social media monitoring to keep an eye on the financial news, social media platforms, and other forums to gauge market sentiment. And these channels often reflect the collective mood of investors. Also look at sentiment indicators like COBE volatility index, VIX in sentiment surveys, and basically this you can use to assess overall market sentiment. High level of fears or euphoria can signal potential turning points. Also, look at contrarian thinking. Uh, Consider adopting a contrarian approach when market sentiment is excessively optimistic, that is in euphoric stage. It might be a signal to exercise caution or even exit some stocks. Conversely, in times of excessive pessimism or panic, opportunity for values may arise for buying. Value in popular stocks, look at value in unpopular stocks and explore opportunities in stocks that are either unpopular or have been overlooked due to negative sentiment. And these stocks may have potential for recovery or growth. Do a behavioral analysis of the individual stock, study stock specific sentiments, assess sentiments specially related to the stock that you are interested in. This could involve monitoring news articles, social media discussions, and analyst report. Look at earnings calls and guidances. Pay attention to management's tone and guidance during the earnings call. Positive or negative shifts in language can influence investors' sentiments. Consider psychological levels, psychological support and resistance levels. Psychological levels such as round numbers or all-time highs can impact investor behavior. Breakouts or breakdowns at these levels may trigger emotional responses. Pay attention to round numbers. Pay attention to how stocks react around the round numbers of $100, $500, 1000 rupees, or whatever your currency is. Investors often react strongly to price hitting or crossing these psychological significant levels. Evaluate market rumors and speculations. Do a rumor analysis. Be cautious of market rumors and speculative news. Unverified information can lead to irrational price movements really based on emotions rather than facts. Separate noise from substance. Differentiate between noise and fundamental factors. Emotional reaction to rumors may create short-term volatility, but it is crucial to assess the substance behind the news. Set clear investment objectives, define your objectives, Define clearly what your objectives are in terms of amount of money you want to get, risk tolerance, and time horizon. Having a well-defined strategy can help you resist impulsive decisions driven by short-term decision sentiment. Avoid emotional trading by establishing rules when to buy, sell, or hold based on your objectives. This helps mitigate the impact of emotional trading decisions. Use technical analysis with caution. The trend analysis, while technical analysis is valuable, be cautious of relying solely on the trend analysis. Trends can be influenced by psychological factors, and sudden shifts in sentiments may not always align with the technical patterns. Combine trend analysis with fundamental analysis. That can give you a comprehensive view. Fundamental factors provide a more stable foundation amid the volatility influenced by the investor sentiment. Monitor inside trading, insider transactions especially. Keep an eye on the insider trading activity. Executives buying or selling shares of their own company can be indicative of their confidence or concerns about the company's future. Look at Form 4 fillings. Regularly check them on SEC, which can disclose insider transaction. Significant insider trading or selling can offer insights into companies' prospects. So thank you so much for watching this additional lecture on behavioral finance insights in this course on fundamental equity analysis. I hope you're continuing to learn new things, continuing to enjoy, and I do look forward to see you again somewhere. Please feel free to message me if you have any questions, and also download the PDF file to take a look at anything that you need to.